Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, August 15th, 2022. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. So you recently did a deep dive into Japanese investor activity in foreign bond markets, or in all foreign securities markets over the first half of 2022. The piece was entitled Tokyo Investors and JPY, Increasing Weightings of Alternative Assets, Reshuffling G10 Bonds, and Shifting to JGBs. Among the many takeaways, I was personally struck by the sheer size of foreign bond and particularly U.S. bond selling. Can you take our listeners through that as well as other key points of the piece?
Thank you. So far in year 2022, Japanese investors have unloaded a net 16.5 trillion yen of foreign securities, primarily foreign bonds, according to the MOF's full data. The selling has been driven by, firstly, Japanese banks, 11 trillion yen. Secondly, pension funds, trust bank, 5.7 trillion yen. And third, lifers, 3.5 trillion yen. In July, Japanese banks turned net buyers of foreign securities by 524 billion yen, while in contrast, lifers unloaded a substantial net 1.5 trillion yen. Retail investors have remained bullish in their risk selection, with securities companies buying a net 4.4 trillion yen and a Toshin Investment Trust 521 billion yen of overseas securities so far in 2022.
Okay, so heavy selling of foreign securities, particularly foreign bonds, over the first half of the calendar year. And then again in July, just huge selling by lifers. I think that might have been a record, if I'm not mistaken. But the tide seems to be turning for Japanese banks who became buyers of foreign securities in the month of July. So we may be perhaps at an inflection point. So let's continue on this. What about, you talked about a lot of different investor types. What about pension funds specifically? What does the data show?
Japan's balance of payment data shows that Japanese pension funds became net buyers of overseas securities in March to June by 1.5 trillion yen, after selling a net 1.2 trillion yen in January to February. Since the beginning of the calendar year, Japanese pension funds have net sold 639 billion yen foreign stocks and investment fund holdings, and net bought 1.2 trillion yen of medium to long-term foreign bonds. Pension funds appear to have expanded their purchases of foreign bonds as G10 yields were rising, as well as reducing their exposure to foreign stocks amid market bearishness, as they adjusted the weightings of their asset portfolio classes.
Okay. So that's pretty clear what pension funds are up to. What about lifers? I mean, you spoke to the high points earlier. Let's dig a little bit deeper.
Okay. Since the beginning of the calendar year, lifers unloaded a net 2.6 trillion yen of medium to long-term foreign bonds, while at the same time bought a net 591 billion yen of foreign stocks and investment fund holdings. With regards to medium to long-term foreign bonds, lifers sold a net 625 billion yen in May, 922 billion yen in June, and a big 1.5 trillion yen in July. Over the near term, all eyes will be on how lifers use their excess cash after unloading foreign bonds for either JGBs or alternative investments. We expect lifers to first increase the weightings of their JGB holdings and then continue to diversify their asset portfolios with foreign stocks and investment funds. Yen basis could widen, particularly in the belly, as Japanese investors purchase falling assets with asset duration matching, then lifers adjust their asset portfolios. In contrast, Japanese banks have spent this year shifting to alternative assets.
Wow. So just, the lifers sold a lot in May, more in June, even more in July. But again, I guess at some point they sort of run out of foreign bonds to sell. So you're thinking that the basis could widen as they eventually redeploy that cash into foreign, security markets,
Right.
whatever that security is, alternative investment or otherwise.
Mhm.
Okay, great. What I'd like to do is wrap things up with your outlook across various markets, specifically yen rate, spot dollar yen, and yen basis.
Okay. Over the near term, all eyes will be on the Fed leadership and any comments. Hawkishness among the FOMC members and regional Fed presidents could support a stronger dollar. On the other hand, Japanese outward investing is presently quiet over the Obon holidays, and with a gap in the timing of US Treasury yield coupon payments, Japanese investors sell dollar and buy yen. We change our view for dollar yen from bullish to neutral bias, with trading in a 3 yen range between 131.50 to 134.50. The yen swap rate curve has flattened, with the front end up and the long end down. Prime Minister Fumio Kishida has reshuffled his cabinet out of the Bon summer holidays. 5-year JGB auction on August 16th and a 1-year TDB and a 20-year JGB on August 18th auctions were coming up. But the abundance of cash held by Japanese investors is likely to limit volatility as they repatriate their funds following US Treasury coupon payments. We see a neutral bias for yen rates. The yen basis curve has tightened slightly. The Ministry of Finance weekly securities flow data shows that Japanese investors turned net seller of overseas securities by a net 136 billion yen in a week of July 31st to August 6th. This included net selling 1 trillion yen of foreign stocks and investment fund holdings, the first time in 8 weeks, and net buying of 827 billion yen medium to long-term foreign bonds, third straight week of buying. They also bought a net 73 billion yen of short-term foreign bonds. Japanese investors appear to have started to rebuild their foreign bond positions. Over the same week, foreign investors net bought 2.9 trillion yen of Japanese securities. This included 1.8 trillion yen of short-term yen bonds, 1 trillion yen of medium to long-term yen bonds, and 61 billion yen of Japanese stocks and investment fund holdings. Over the near term, we expect Japanese investors to get off to a slow start after the Obon holidays, and overseas investors to dominate with building their JGB positions, stabilizing JGB auctions, and tightening the yen basis. We change our view for the yen basis bias from neutral to tightening.
Okay. All right. So neutral on dollar yen and JGBs, but view on the basis of tighter as the Obon holidays sort of limit Japanese investor purchases of foreign securities, at least locally. And again,
Right.
I think the maybe the most important point you make in this episode is that Japanese investors appear that they're rebuilding their foreign bond positions, again, not locally with
Right.
given the holiday, but that's really an incredibly significant conclusion, just given the huge amount of selling the first half or so of the year. So why don't we leave it there? Great insights as always, Sekido-san. Thanks for joining us on the podcast.
Thank you for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.